Hello everyone. Our subject is auditing and assurance as per NEP 2020 from MCOM Part-2 Semester 4. Our question is discuss the key elements of an audit engagement letter. Once the auditor confirms the preconditions, they must document the agreed terms in an audit engagement letter. This letter acts as a formal agreement between the auditor and the client, ensuring clarity, preventing misunderstandings, which means before starting an audit, the auditor needs to make sure that everything is suitable for doing the audit. This is called checking the preconditions. Once that done, the auditor and the client, means the company, need to clearly agree on what the audit will include, what responsibilities each side has, and other important details. To make this official and avoid any confusion later, they write all these agreed terms in the letter. This is called the audit engagement letter. Think of it like a contract that helps both sides understand their roles and what to accept. It keeps things clear and professional right from the beginning. Our first point is objective and scope of the audit. The audit is conducted to provide an independent opinion on the financial statement. The scope includes an examination of financial records, internal control, and compliance with law, which means imagine a company wants to show its financial performance to the world, like how much money it made, how much it spent, and whether it followed all the rules. But can the companies just say, trust us, everything's fine? No. People want an independent expert to check the truth. That's where an auditor comes in. The objective of the audit is to give an honest, unbiased opinion about whether the company's financial statements are true and fair. Now, what does the scope mean? Think of it as the area or boundary the auditor will cover during the audit. It includes checking the company's financial records like receipts, invoices, bank statements. Looking at how well the internal control work, like systems to prevent fraud or error. Making sure the company is following the law and rules it's supposed to. So, the auditor's job is to dig into the details and then say, yes, these accounts look correct. And they do this by looking at everything inside the boundary or scope of the audit. Our second point is responsibilities of the auditor. Conducting the audit as per standard on auditing using professional skepticism and judgment, providing reasonable assurance but not absolute assurance, which means the auditor has to follow proper rules called standards on auditing while doing the audit work. They must use professional skepticism, meaning they should not simply believe everything the client says. They need to ask questions, check evidence, and think carefully. They also need to use their professional judgment. to make fair decisions based on what they see. The auditor gives reasonable assurance. This means they give a high level of confidence that the financial statements are correct, but they don't promise 100% accuracy. Some small errors might still go unnoticed. Our third point is responsibilities of management, preparing financial statements in accordance with applicable accounting standards, maintaining effective internal control, providing all necessary audit evidence, which means before the auditor even starts the audit, it's the management's duty to do some important things, such as prepare the financial statement. The financial statement, the company managers must first prepare proper financial statements like the profit and loss account, balance sheet, etc. by following the correct accounting standards. It's their job, not the auditor. Maintain internal control. They must keep a good system in place to prevent the mistakes or the fraud. For example, checking bills properly, keeping stock records, and having approval system. These are the part of internal control. Give all needed documents and information to the auditor. Management must cooperate with the auditor and provide all the evidence like voucher, bill, reports, and examinations that are needed for the audit. The auditor checks, but the management is responsible for creating correct accounts, keeping proper control system, and helping the auditors with all required information. Our fourth point is limitation of an audit. Audit is based on sampling and does not provide absolute assurance. The auditor may not detect all frauds or errors, which means an audit is not perfect. It has some limits. Audit is based on sampling. The auditor doesn't check every single paper or transaction. Instead, they check a sample, like a small portion, and from the opinion based on that. So, some things might be missed. No absolute assurance. The auditor gives reasonable assurance, not 100% guarantee. Even after a proper audit, some mistakes or frauds may still go unnoticed, especially if they are very well hidden. So, an auditor does the audit which is helpful and you can trust on it, but it's not full. It reduces the risk of error and fraud, but cannot remove it completely. Our fifth point is financial reporting framework. Specifies applicable standards. Indian accounting standard, and international financial reporting standards, etc. Which means the financial reporting framework is the set of rules a company must follow to prepare its financial statement. These rules includes accounting standards, and international financial reporting standards, depending on the company. It helps make sure the account are correct, clear, and follow proper standards. The auditor checks if the company has used the right framework. Our sixth point is audit fee and billing arrangements. The engagement letter should clearly mention audit fees, payment schedule, and additional charges if applicable, which means when a company hires an auditor, they have to pay fees for the audit service, just like you pay fee for tuition. So, the audit engagement letter should clearly mention how much the auditor will be paid as an audit fee, when the payment should be made means payment schedule, and any extra charges if there are additional work beyond the regular audit. This avoids confusion later and keeps everything clear and professional between the company and the auditor. The letter should clearly say how much, when, and for what the auditor will be paid. Our seventh point is other legal and professional matters. Reporting obligations, confidentiality clauses, and disputes resolution mechanism, which means apart from the main audit work, these are some important legal and professional rules that both the auditor and the company must follow. These are also written in the audit engagement letter. Let me explain them one by one. First, reporting obligations. This means the auditor must report certain things like fraud or law violations to the proper authorities if required by the law. Second, confidentiality clauses. The auditor is not allowed to share company secret or financial details with others. Everything must be kept confidential and private. Third, dispute resolution. If there's any disagreement between the auditor and the client, there should be a clear way to solve it, like through discussion, legal action, etc. These are the extra rules to ensure the auditor does their job properly, keep things private, and solve problems legally if they arise.